Hello and welcome back to my favorite people. Hope you're doing well. I'm incredibly excited for today's video because this truly feels like Bitcoin's moment of truth as it tries to hold above its 20-week moving average, a trend we have maintained since October of 2023. And funny enough, during that exact same time period, since October of 2023, the dollar index has been getting rejected by its pivotal 106.50 region. So now that it's threatening a breakout on its third attempt, while Bitcoin is holding on for dear life and threatening a breakdown, I think it's incredibly likely we're going to get our answer this week and find out if the left translated cycle scenario will be invalidated. And funny enough, this very strong inverse correlation between the dollar index and Bitcoin didn't even start in October of 2023. If we see when we actually fell below that pivotal 106.50 region that we have been accumulating under for 18 months, it was in November of 2022, and any of you that follow crypto closely should be very familiar with that date because that's exactly when Bitcoin found its bear market bottom and started the uptrend that we've been enjoying for the past year and a half. And that's why I think next week and perhaps the week after are incredibly crucial, because we have the dollar index on the verge of breaking out of an 18-month reaccumulation pattern and above a resistance level that it's been below ever since Bitcoin found its bear market bottom. And we know that Bitcoin requires a weakening dollar for its mania phases, and a strong dollar puts immense downward pressure on Bitcoin. And it's very easy to see how bullish this chart looks. You can call it a cup and handle. You can call it a very clear uptrend with higher lows and higher highs. But I don't think this 106.50 region holds on the third attempt. And if that breakout were to occur, we probably enter that normal cycle thesis we've been talking about for a while, where we enter that much longer reaccumulation phase and spend a lot more time consolidating than most market participants are ready for. We're also seeing a very interesting relationship between the S&P 500 and Bitcoin, as I spoke about on Twitter here. For the first time in quite a while, we're seeing a bit of a divergence. Bitcoin has been selling off a little bit while the S&P 500 has been able to continue its rally. And we have seen that here and there because Bitcoin is way more sensitive to monetary policy and the US dollar index than the S&P 500 is, but definitely something to watch because either Bitcoin is giving us a leading indication of what's coming for the S&P 500, or the S&P 500 will continue grinding higher and Bitcoin is just going to play catch up. But as of right now, with rate cuts still not being expected until September of this year, I do think there's a lot of pressure on risk assets right now, and we do know the Fed has a track record of keeping rates elevated for too long and breaking something in the economy before actually pivoting and cutting rates. We're already seeing a little bit of weakness from the S&P 500, not the best candle last week, but of course, I'm not going to try and call a top on this asset because of one wick to the upside. We want to see what the follow-up next week is like. And perhaps a lot of that is going to have to do with the scariest chart in all of markets right now, which is the Nvidia chart. And I don't like calling tops on parabolas, but this is definitely perhaps the most important stock to watch next week because this is quite a bearish candle with this huge wick all the way to 140-ish and then closing back below the open here at 126. Again, parabolas can still grind higher, but you can see how these consolidations have been getting shorter and shorter, and perhaps there's still one move higher, but this is getting incredibly risky and has gone quite vertical over the past few weeks or so. And now that Nvidia and other tech stocks make up so much of the S&P 500, there does seem to be quite a bit of fragility right now, especially if we still have to wait another few months for rate cuts and the dollar index is going to break out and continue higher in the short term. So if you're short-term bullish, you really want to see the dollar roll over here and put in a lower high and not retest that 106.50 region. And you really want to see Bitcoin close above its 20-week moving average and get a strong bounce. In my opinion, I don't think that's what's going to happen. I do think it's a lot more likely that we break down here with the bullishness we're seeing from the dollar index, because I do think that the markets are getting more and more weak as these rates have remained higher for longer. And we've been talking about the very concerning signs in the labor market and how it looks like the unemployment rate has already begun its trend that usually doesn't reverse until we enter recession. But of course, these are things we're going to have to continue to monitor as rates remain higher for longer, as the Fed tries to bring inflation back to its 2% target. Now, to be fair, there's also a very strong bull case. You could perhaps say the federal government knows the track record of rates being higher for longer and what that does to the S&P 500 and the Fed's track record of breaking things, which is maybe why they're running these huge deficits on pace to be about 2 trillion this year. It's already 1.2 trillion, and maybe that will keep the labor market afloat, and maybe it will allow the S&P 500 to grind higher until the election. And that's why I'm not completely sidelined waiting for lower prices, because I do think this longer term currency devaluation will put upward pressure on risk assets, especially if we're already running recession time deficits, even though we haven't entered a recession yet. For example, even last year in 2023, the federal government had a bigger deficit than what it took to pull us out of the great financial crisis and the dot-com bubble combined. So it's really hard to say when this recession is actually going to happen. And that's why I'm not willing to sell all my assets and wait in cash, because I do think there's a very good likelihood of the normal cycle, but there could be a lot of volatility between now and then, thanks to the Fed keeping rates for as long as they have at these elevated levels. But the way I'm protecting myself is by staying allocated to assets that I know will survive a downturn. I know a lot of you hate Ethereum and think it's a scam. I know a ton of you hate Solana and think it's a scam, but these are assets that actually have users and will take part in our next cycle whenever that ends up being. And that's why my portfolio is set up the way it is. And the continued bullishness we've seen from Bitcoin dominance makes me even more comfortable having a relatively Bitcoin heavy portfolio, because the beating that altcoins have been taking recently has been absolutely insane. And it's very hard to know when that's going to stop, especially if we're expecting risk assets to suffer because of the strength we've seen from the dollar. So my expectation is still Bitcoin dominance higher, maybe towards the 60% level, an underperformance over the next few months or so. Of course, that's excluding Ethereum, because I'm still curious to see how Ethereum trades around its ETF launch, which I think, based on what people are saying, is expected the first week of July. But we do know we have grayscale unlocks happening, so a lot of Ethereum's price action is going to depend on what type of inflows Ethereum is going to receive. We know Ethereum is not going to get anywhere near as many inflows as Bitcoin, but I'm still curious to see what the inflows end up looking like before completely writing Ethereum off. It's trying to hold on to its 20-week moving average as well, just like Bitcoin is trying to. So again, very pivotal week next week for Ethereum. Unfortunately, Solana is not doing nearly as well. We talked about how it was losing its 20-week moving average. You could maybe even make an argument that perhaps Solana is just front-running Ethereum and Bitcoin the same way it led the market to the upside by significantly outperforming. And right now it's running the risk, if we get a weekly close below 137, it will become lower highs and lower lows on the weekly chart. And perhaps that would further confirm that we're going to see a normal cycle with a prolonged consolidation and reaccumulation. And I'm not going to be jumping into any new risky positions until we let some of this consolidation occur. But if we're going to have any type of reprieve in the short term, but that is looking less and less likely, again, because of what we're seeing with rates and the pressure they're putting on the dollar index to the upside and the pressure that's putting on risk assets to the downside. So economic data, and I really want to see how the dollar will react on the next test of 106.50. And of course, all eyes are on Bitcoin trying to hold its 20-week moving average, a very important trend indicator for it historically. And it usually holds above it in bull markets. But of course, the only way we're going to know for sure is by monitoring not only the charts, but also the data over the next week or two. But for now, a larger drawdown in a lot of these assets, but I'm at least finding solace in the fact that I'm not way out on the risk curve by holding 80% meme coins or new launches. And I do think these assets will do well in the long term, because as we always say, currency devaluation is here to stay. I still think Bitcoin does well on a long enough time horizon, just like the S&P 500 has, because they're devaluating the denominator in the long term, and these national deficits will have to get paid out by dollars when these bonds, treasuries, and notes actually expire, because of course this is a trend that has definitely hit escape velocity, and I don't think that the trend of the national debt and the money supplies is going to slow down anytime soon, and that's why I want to hold risk assets over the long term. But anyway, let me know what you expect. Will Bitcoin be able to hold its 20-week moving average, and will the dollar 20-week moving average? But we'll just have to monitor that and see how it plays out going forward. As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.